Hi, welcome to this video day, which is on the 3rd of February, it's Saturday. Going to be looking at a high odds swing trade in our view in a moment, which is going to be GBP USD short. Now, in terms of this pair, we did look at it last week in a video. We got triggered on entry, but didn't really do much until Friday. And the pound had a nice sell-off. Now, I'm looking for that sell-off, hopefully, to continue. Now, in terms of if it does, I think, the pound has got the potential to make 500 pips or more. Now that is a very ambitious target. And the way I've got it is just by looking at our favourite tool in Forex trading, the COT, the Commitment of Traders report. Now, if you don't know what it is, simply click on the link beneath this video. Now, in terms of the COT, it's a great tool. Not only can it help you find entry points with good risk to reward, it can also help you project ambitious targets, which you just purely can't do from technicals alone. The COT gives you the sentiment behind the chart, which allows you to do that and gives you the confidence to hold big moves. Now, in terms of my analysis of GBP USD is obviously, as of right now, it can change on a daily basis. If you want our daily chart analysis on 12 major pairs, all our trading techniques, you can get live access to our member centre on the link below. Now we're going to go to the charts. Just one final point. At the end of my GBP USD analysis, I say we're going to move to GBP JPY. Decided not to do GBP JPY in this video. I'm going to do it in another one in the next day or two. Okay, so we're just looking at GBP USD today. Right, let's go and look at the charts, and we're going to start with the COT net traders positions first. I'm going to quickly look at the COT net traders positions before we go to the chart and draw our levels of entry, stop and target. Just for new viewers, I'm just going to review how we use the COT net traders and why this setup at the moment is so attractive. Now, we're interested in commercials in red, large speculators in green. And one of the simplest ways to use it is to look for a big divergence between the groups, setup A, okay? You can see the commercials very long, speculators very short. It breaks in favour of the commercials. You can also use it within a trend, dips down here, sort of bases. Commercials been stepping up their buying here. Bang, up she goes to point C, okay? But look what they do. They cross over, go short. Speculators cross over and go long. You can very often use crossovers to give you signals as well when the groups change their opinion. So the commercials want to go short, specs long, and we come down, okay? Now, the commercials do come up into point D and buy, okay? Then here, 136 is where they're really starting to move their hedges and drop short. And this divergence here historically is the biggest between commercials and speculators since 2014. The speculators are very bullish, commercials bearish, and you get a steep price rise. And this is why the commercials are so effective to help back up your trading. You know anyway that any really steep price rise or price spike will fade back at least a little bit. And what we see is you get a move up here, come down, try to come back up, and now we're coming down. Now, we think the pound is going to come back towards 136. This is just an emotional spike. If it does, of course, and it has to come to fruition, that's over 500 pips. And I'd expect it to come back to 136. This is a major level. This is the level where the commercials really moved their hedges aggressively. Sorry, I'm just looking, I spelled speculators wrong. Sorry about that. So we're looking for more downside in the British pound. So let's go and draw some levels of entry, stop and target. We're on GBP USD daily. Now we've obviously seen the COT, and the COT is giving us clues to the chart. Now that's the really great thing about the COT in my view. Not only can it give you areas to buy or sell into, it can also give you a target, which I've called the commercial value area here, okay? So 136, we know that is where they really speeded up their selling. Now, what we have here is a fairly gentle move up and then an accelerated up move, a spike, and now we could be coming down. We'll draw the levels in a moment. Now, in terms of the commercials, when you get a steep price rise and they sell into it like they have done in the British pound, just looking at a technical chart, the price spikes tend to fade back a good proportion of the spike or all of it. I personally think all of this one is going to fade back. Now, in terms of the fundamentals, I've listed them out. You don't necessarily need to know them. The commercials know, the fundamentals. I've got deep understanding of them and fair value, but I just always find it helps me. So I'm just going to list out what I think the commercials are saying. Consumer borrowing and spending in the UK is down and debt levels are elevated. UK consumer, very important because, if they're spending strongly, that shows up in consumption. If consumption's slow, so does the UK economy. So consumer under pressure. And you can see it also in wage growth figures. The growth of wages below inflation. That means the consumer is not going to recover quickly. So the consumer who powered the UK economy last year is running out of money. The UK economy will slow up a bit. Okay. Now, the market did get very excited, and you very often get this. The Bank of England says it's focused on inflation. That was Governor Carney. The market gets excited, and there's all this talk about interest rates in the media. Okay, he's referring to 2019, not now, and that's been clear from the Bank of England for a while. But the markets like news, and dollar actually very oversold on the other side. Any excuse to sell the dollar. My own view is the pound, and I put it here, bought more on USD weakness than pound strength. USD is a bearish extreme. If you look at the USD, oversold. Well, not just major currency. You can look at minors and exotics. It's just been across the board selling. We were saying last Wednesday in a video that is all going to end because the market is not seeing the Fed and how quickly they're going to have to raise rates, which we were looking at in the bond market. I've done an updated video on that, which is next to this video. That just pointed, when non-farm payroll came around, to the pound falling and other currencies falling on the USD. Now, if we look at the chart and how we've played it, obviously get this big break up here, big blue candle, this red, clear blue sky, okay? But she fades back to settle near the lows. Now, we're going to come in, always use aggressive, or most of the time use aggressive entries, just coming through 140, 180, just below the round number. And that was, on this one here, this candle. And we go down a bit, we touch 140, we have another go to get past this candle here. And we just didn't think that could happen, okay? And it didn't actually happen. I mean, get up just about to this candle, nowhere near this one. Blue though, but then we get a nice red. So, at the minute it's 60 pips in profit, but I'm hoping we get a lot more than that. Obviously, that's, a nothing profit, so to speak. I think this double top will now hold on a close basis. We're not bringing our stop down just yet. Our stop is still back behind this candle. I want to see some follow-through selling. Okay. But I think on a close basis, that looks a tough level to get through. Of course, it can get through, but looking for it to hold. Now, my own view is we're a sell if you're coming in fresh back to this double top here on the bodies. And, if we sell off, I think just go with the sell-off because there's plenty of downside potential. You've got minor resistance, in my view, at 140. From a purely technical perspective, when you know the COT, you know a lot of speculative stops to be hit. So I just think we're going to come into this level, run it, and then follow on to the downside. And I think, Friday's candle could be very, very significant. A lot of people won't just come in and sell because they're not thinking that they're getting the best price. But sometimes if you wait for the pullback, you'll be waiting a long time if it doesn't pull back. So my own view is if you're bearish, just get in. Said it in numerous videos, we always run two trades, so we've always got the option to bank one out and protect ourselves. So for example, if we get towards the 140 level, bank half out. Okay, we're in at 140, 180, so we can take if it gets there, of course, 180 pips off the table, and see if she runs. If she bounces back, we might put her in a better price or just wait, or we can just drop her back in below the 140 level. So I always think it's a good idea to run 2 trades so you've got the option to take some money off the table. It's hard sitting on big trends. Okay, this isn't a big trend yet, but it's always just hard. Okay, so having the facility to bank a bit of money in is always good. You don't get the best, you don't get the worst, and it smooths your equity curve. So for this setup, I'm looking for it to go down to 136. We'll manage the trade as it goes. I'm just hoping it becomes a nice move to the downside. Now, in terms of another potential trade in the British pound, let's take a look at GBP JPY.